Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder activist. And we are
The Money
Money
Café.
Café, Alan.
Good morning, Stephen.
The $4 trillion day. Never thought we'd see it, but Nvidia.
Yeah, so
don't own any.
No, that's right. It's the Nvidia has hit a market cap of $4 trillion. It's the first company to do that, and it's a kind of emblematic of the rebound of the share market in the US since the reversal, the correction that took place after the tariffs were introduced. So there was a kind of I think it was 20% or so reversal or correction, and now they've gone all the way back, and Nvidia is at a record high.
Yeah, it's sort of like tech boom AI, a stronger, more powerful force than anything Trump tariff mayhem can throw at the market. And Nvidia only got to $1 trillion 2 years ago. So it's literally gone from $1 trillion to $4 trillion. And I think I heard someone this morning saying that their annual capex spending is only $4 to $5 billion. So unlike all the other ones, Google, Microsoft, Apple, which are going to have to spend tens of billions of dollars on the whole AI game, the large language models, etc. And it's a bit of a punt as to sort of the level of return they will get. Nvidia is just a cash machine without the huge capex, servicing all those other big boys who are trying to nail AI.
And also, it's worth noting that its price-earnings ratio is not all that outrageous. It's forecast to make a net profit this year of $105 billion. So that means that the PE is 38 times, which is high, but it's not ridiculous. Like there are Australian companies with PEs of 38 times. So look, it's not the sort of level of PEs of 100 times and more that were seen during the late 90s internet bubble. So
and they're all still booming. I mean, people are saying, Apple, they've delayed the relaunch of Siri. Their AI strategy is up in the air. What are they doing? Their market cap is still $3.1 trillion US this morning, even though Samsung, their great rival, has just overnight launched a couple of their newest phones with Google's Gemini built into it. So you've got the mobile phone with all the AI features built into it. So you can ask your latest Samsung phone, how do I look in this outfit? What changes should I make? And the Google Gemini AI will spit out a few suggestions about changes of colors and this sort of stuff. So it is moving in sort of the real life examples of AI being rolled out. Apple supposedly asleep at the wheel, still worth over $3 trillion.
Yeah, so there are two sort of parallel themes going on in the United States at the moment. One is the AI boom, and the other is Trump and the tariffs, and everything else that Trump is doing, and sort of, it's hard to know which of them is going to prevail. Really, I mean, AI is kind of artificial intelligence is just taking off, not just in the US, of course, but China as well, in particular in China. And China has this goal of becoming the dominant player in AI, which, you wouldn't count them out, to be honest.
But even DeepSeek Monday, which was when the stocks all crashed when everyone saw how good DeepSeek was, that seems to have been forgotten too, because the Nasdaq is at a record high. So it is just extraordinary. And then Trump comes out with his, down here in Australia, we're fretting about, copper tariffs, 50%, because, we're a quarry and dig it up, a commodities economy. And our copper stocks all fall on the market yesterday, 50% tariff. I mean, what do you make of that? I mean, he's adding to alumina and steel. I mean, he's picking on commodities one after the other, and it doesn't make a lot of sense.
Yeah, so I've been thinking about this. I reckon that the way the tariffs make sense is simply a tax that Trump says will be paid by other countries. Now, that's clearly not true, right? So tariffs are basically a sales tax on imports paid by the buyers of the imports in America, whether they're consumers or other countries. So so it's, everyone knows, I presume including Trump, that the tariffs will be paid by Americans, whether individuals and companies. But what he keeps saying is that we're going to charge, Vietnam 40%, or all the tariffs are being, and he basically is asserting that the tariffs are paid by other countries. And that's kind of, the media has kind of become, tired of countering that. It's sort of, you can only say so often, well, that's actually not true, And so I think what he's doing is basically imposing a GST that he asserts and is kind of believed, presumably, by his followers and the Republican voters and everyone, and possibly others, that is not going to be paid by people, but not going to be paid by Americans. And so,
but it's actually going to be $1 trillion a year.
Yeah.
Plus, I mean, as you said on the news last night, it's already 9%, $30 billion a month, and rising. When it's fully implemented, it's going to be over $1 trillion of tax revenue to the Trump administration.
Yeah, so that's what I think is going on. I mean, copper, the idea that he's going to impose a 50% tariff on copper, they can't actually replace their imports. I mean, copper
that's
is
the
really...
point. There's only 2 copper smelters in America, and there's just not going to be a whole bunch of copper smelters built in America. It's not going to become self-sufficient in copper.
That's right. So it's just going to be a tax. There's no way that it's an attempt to set up a manufacturing industry in America.
But that then feeds into the cost of everything in America. That should be inflationary. If you're building data centers, you need copper. If you're paying a 50% tariff, then your construction costs go up, everything goes up. That is inflationary. That's what Jay Powell is nervous about. But so far, the inflation hasn't seemed to come through. The exporters, the importers seem to be swallowing the tariffs, but surely that's got to come. But other people are saying, yes, but the whole AI productivity dividend is going to slash the cost of services so much that this is going to offset the surging costs of some tariffed goods, and the net on US inflation, it's not going to be out of control.
Yeah, but we got a GST of 10% in 2000, and it did lead to a big increase in inflation. But the trouble is, the thing, it was one-off. It was just, but that's the thing about these tariffs. They'll increase inflation, but on a one-off basis. And just like the Reserve Bank looked through, didn't worry about it. In 2000, they didn't increase interest rates because of the short-term increase in inflation. I think it's reasonable to expect that the Fed will look through these as well, particularly if Trump puts his own person in there. So the Fed will be cutting interest rates, not increasing them. So they certainly won't increase interest rates in response to tariffs. I think. I mean, clearly they'll be one-off increases. They won't lead to long-term increases in inflation. But look, it might slow the economy down, but I don't think Trump's too worried about that. I mean,
no.
He wants...
People worried about Elon Musk, isn't he?
Well, maybe. I don't know. He doesn't seem to be worried about that. I don't know that he needs to be. I mean, to be honest, I think Trump's
blowing
on a roll.
up again.
Trump's doing really well at the moment. I think that...
well, he got his big bill through, didn't he? The market's at a record high.
Market's record high. Everything's going fine.
He's rolling out his tariffs.
Yeah. He's absolutely killing it at the moment, I think. Yeah.
I was quite amused by this ASX announcement by this small company called Advanced Zinc Tech yesterday, $50 million market cap to the ASX. Quote, first paragraph. In light of the Australian government's decision to not negotiate with the Trump administration on tariffs, the Trump administration has announced a 200% tariff on Australian pharmaceutical companies if they fail to relocate to the USA within the next 18 months. So... what's CSL going to do? Just move their entire pharmaceutical manufacturing to the USA to avoid a 200% tariff? It is an extraordinary negotiating tactic. He's sending these sort of shock and awe letters one by one to countries to sort of force them to negotiate. And the Canadians, gave up on their big tech tax. Obviously he wants us to give up on tech taxes and the PBS and all the beef. But people are caving. Like, it's just an amazing way to negotiate.
And he's threatening a 50% tax on Brazil if unless they stop prosecuting Mr. Bolsonaro, the former president, who's been who's being pursued for corruption charges by the new president, and Trump says that's an international disgrace. And if you don't stop doing that, we'll impose a 50% tariff. So he's using it for political reasons too now.
Well, he's selling pardons domestically, and he's using tariff policy to get dodgy mates off overseas. I mean, he's even been threatening the Israelis about the Netanyahu corruption court proceedings, which have been dragging on for many years. So, look, I mean, the corruption of Trump is amazing. I mean, the $16 million payment that Paramount, which owns Channel 10 in Australia, has made to him settling a court case over a 60 minutes edit of a Kamala Harris interview, basically a pay-to-play to get their ByteDance merger approved by the Trump administration. So he's certainly monetizing the office and reaching in on all sorts of corruption and governance issues all over the world now, with the Brazilian and Netanyahu plays as well.
Moving on, have you been doing any general meetings lately?
Oh, look, it's off season, so I've done a couple of tiddlers, because normally what I do is if it's worth more than 10 million and they're having an online meeting, I'll buy into the company and I'll lob a few questions. But if they're in Melbourne, where I am, and they're having a physical meeting, I might buy in. So I had a couple of interesting ones. I went to one called Ionic Rare Earths during the week, and it was amazing. Do you know they're the biggest magnets recycle play in the world? They've spent £12 million building a magnet recycling factory in Belfast, of all places, in Northern Ireland, for £12 million. And this is the most exciting play in the world, they say, for the whole Chinese ban on magnets. So the Chinese have sort of, did their export ban on magnets. You had production lines at Ford being shut down, the German car industry being interrupted. A lot of people are panicking about the Chinese leverage in rare earths, and most specifically in magnets, which are pivotal for phones and military and everything else. And of course, recycling is the big play. 40% of the Chinese supply chain is recycled magnets. So the West is scrambling like crazy to get recycling of magnets up, which is a much cheaper way than doing new mines and new rare earths processing plants. And this little Australian company, Ionic Rare Earths, has got the Brazilians love them and the US love them. And yeah, just a really exciting play. And you had these sort of 6 retail shareholders sitting at the meeting, all very excited and grilling the chair and the CEO for like an hour. And it wasn't being broadcast. It was like a selective briefing for us 6 shareholders. The share price has doubled. My $500 quickly became $1,000. I sold out. But it's quite exciting in small cap land out there.
You shouldn't have sold. Why'd you sell, Stephen?
Oh, I can't afford. I got to buy new stocks. So, then the next day I went to a thing called Oncosil Medical, which has lost $100 million. And they've got a medical device solution for pancreatic cancer where patients can self-inject. And pancreatic cancer has the highest mortality rate of all cancers. But like so many medical plays, they've lost $100 million. So you had the exact opposite. You had 6 furious small shareholders all screaming at the board, and they only bowled up one. The one poor non-executive director, Gabriel Liberatore, he fronted. The chair didn't turn up, the CEO didn't turn up, and there was 6 of us just grilling him for 70 minutes. And I said to him at the end, "Are you recording this? I mean, this should be on the ASX." Nope. And I said, "Well, I've recorded it on my phone, so I might put it out there." But in small cap land, it's pretty wild, Alan. You get some amazing stories, you get some shockers, and if they don't have a hybrid meeting so you can access it online, you have to turn up in person. But this week, it's been quite fun.
Well, speaking of small caps, I wanted to tell you about an interview I did this week of a company called MTM Critical Minerals. The CEO's name is Michael Walsh. He's in Perth, and they're changing their name to Metallium Limited, and their code is MTM. But so they are also a rare earth recycler, but it's based on some research that was done by a fellow called Professor James Tour, Tour, in Rice University in Houston, Texas. And he's the guy who invented the technology behind the Israeli-based ASX-listed company Weebit Nano, which has got a new form of flash memory. Anyway, James Tour invented that and gave that or licensed that technology to Weebit Nano. So James Tour invented a way of superheating material to extract graphene. But they figured out that the same process could be used to extract rare earths from what's the stuff that comes out of chimneys? Ash.
Ash. Yeah.
Yeah. So all sorts of waste materials, they superheat it in a flash process that this bloke invented. And the US government, the Defense Department, commissioned him to, see if they could come up with some rare earths. And so he did. And it worked. And so because somebody on MTM Critical Minerals board, and they were exploring for rare earths, just a little Australian explorer, market cap of 3 million. Yeah, 3 million. They were tiny. They weren't going anywhere. But somebody on its board knew somebody at Weebit Nano who knew James Tour, and James Tour gave or licensed the technology to MTM Critical Minerals. And so they've got this license from Rice University for this technology, and they're now building a plant in Texas to do it. And it also extracts gold from printed circuit boards, and extracts minerals from bauxite tailings, which there is a whole lot of it. And so
the market is very excited, Alan. The market cap's up to $296 million. They've just done a $50 million placement.
Correct.
Soaring.
So the thing's gone from, as a result of this technology they've licensed from James Tour of Rice University, Houston, Texas, the market cap of this company's gone from 3 million to 300 million in not very long.
And you know why I'm furious? They didn't offer the 1,200 retail shareholders a share purchase plan to get in on the same terms as the $50 million placement. They paid an excessive 6% cash fee to Petra Capital, leaking $3 million, and then the shareholder meeting to approve all this is a physical affair in Subiaco, all the way over in Perth. So if you're an angry retail shareholder, you have to fly to Perth to complain about not getting in on the giggle on this one. Yes. It's still a great story, though. This is just nitpicking from a shareholder activist process point of view.
Yeah, no, that's fair enough. I'm fully in support of your issues about this, and retail shareholders not getting in on the giggle, as you put it. I think you're absolutely right.
Yes, but it's certainly one to watch. It's very exciting. So,
very exciting.
People should listen to the interview. I listened to it last night. It is fascinating. But it's all that same thing. It's the same game. China dominates rare earth. They've got the whole world in a chokehold if they want to. Trump is absolutely focused on getting self-sufficiency away from China on the whole critical minerals, rare earth things. And there's a squillion little plays all over the world, from Ionic to MTM, which are involved in trying to solve that problem of the West being asleep for 20 years, allowing China to dominate critical minerals, and then a trade war starts, and this is the biggest card China has to play to disrupt the West.
Yeah, it's interesting. All right, let's
move on. We should do the RBA rate shock. We're going to do the RBA rate shock first.
Yeah, sure.
Biggest shock of the year since Albo's landslide. I mean, can you believe it, Alan?
Well, I'm furious because a month ago I wrote in the weekend briefing that there will be no July rate cut. It'll be on hold in July. And then 2 weeks ago I changed my mind because of the way that the market had gone to 100% certainty of a rate cut in July. And I went, oh, well, whoops, there's going to be a July rate cut. And bugger me, I was right the first time.
You know what I love? I love the fact that they've disclosed the voting numbers. So 6-3. It so reminds me of council, where you've got 9 councillors. And when you're selecting the mayor, you all go off into this room and you have this secret ballot to decide who's going to be the mayor. But at least in council meetings, it's all transparent. You can see who's voted for and against each particular item. Whereas in this case, they've just said what the vote is. So they've caused endless speculation as to who were the 6 and who were the 3. But the power lies with the executive chair, the Governor, Michelle Bullock, because she and her deputy, Andrew Hauser, get 2 of the votes and they prepare the papers. So they determine the agenda. So she would have circulated a don't change motion around there. The 3 critics of that might have circulated an alternative motion, cut it by 25%. But as the chair, she would have said, I formally move my motion that management recommends we stay the same. And only 3 of the others had the guts to roll the boss, the executive chair. So she has the power. The government's not happy, and she's shocked the markets. It's quite a moment.
It is actually, yes. And I think everyone's assuming that Jenny Wilkinson, the Treasury Secretary, who is an ex officio member of the RBA board or Monetary Policy Board, would have voted against because... but nobody knows whether she did or didn't. And
is she really just going to do what her male boss says, Jim Chalmers, and roll the independent female chair of the... I don't know. I don't think people should assume that.
No. But 3 people did vote against, and was she one? No, we'll never know.
I think we're half pregnant here, Alan. They just should actually disclose the votes.
No, they'll never do that.
Two reforms I did on 2 councils I served, on Manningham and Melbourne, was to change the meeting procedures to say that the minutes record every single for and against vote by the councillors. Because under the old system, you had to call for a division to get people's names in the minutes. So I changed it and said, no, let's put every name in the minutes automatically for maximum transparency so you can see who voted for the outrageous 10-storey apartment tower and who didn't. And the Reserve Bank should do that. It just should come out with the fors and againsts. The Americans are more transparent. They disclose it. We've only gone halfway here in terms of getting some accountability about how people vote. You don't have secret ballots in the parliament. You have to put your hand up in public. Let's have some open... They should even invite the public to attend and watch the Reserve Bank board meetings, just like you can watch a council meeting, Alan.
Well, I'm prepared to make a firm prediction here, Stephen. They will never do that, and they will never invite you to be a director of the RBA.
And you would have been a great director. And how would you have voted, Alan? I'm going to put you on the spot here.
I would have voted against. I would have voted to cut. I would have voted to cut rates because it's perfectly clear from recent history, which I'm talking about in the weekend briefing this week, that a zero real cash rate, that is to say a cash rate of 0 after accounting for inflation, does not stimulate the economy and does not lead to inflation and does not lead to excessive wage growth, because we had it for basically 10 years before the pandemic. The real cash rate was 0 and nothing happened. And I think that we're in the situation still where nothing would happen if the cash rate was 2.5%.
So you're saying we've beaten inflation, get the cash rate down from 3.85% back closer to what the inflation rate is.
Yeah, I think
Can't argue with that logic, but we're at a housing bubble with full employment. It could cause too much economic irrational exuberance.
That's the problem with cutting interest rates, because all that will do is put up house prices. That's true.
And with markets at record highs, I think both in the US and Australia, you can argue, why would you be cutting interest rates at the top of a bull record market? And with no problems with unemployment.
Yeah.
Why change? The conservative position is don't change, unintended consequences and all that sort of stuff. We're tracking along just fine. Leave them where they are.
Our little monetary policy board then, Stephen, is deadlocked at 1-1.
Yes. So we'll see what they do in August. August the 12th, I think it's a 91% sure, as you said, they'll do the cut.
We'll have to give Greg the casting vote.
Yes.
All right.
Yes.
Anyway, let's move to questions. Before that, let's have a quick word from our sponsor.
Looking for a smarter way to invest? InvestSmart makes it easy by doing the hard work for you. It offers low-cost, professionally managed portfolios made up of ETFs, carefully selected by a team of experts, giving hassle-free diversification. Right now, there's a special offer. Open and fund a new account in July 2025, and you'll get a $100 bonus to help kickstart your investing journey. With options ranging from conservative to high growth, plus specialty portfolios like international shares, there's something to suit every goal. Visit investsmart.com.au to learn more. Terms and conditions apply.
Okay, first question from Peter. He says he's been reading...
I will read this one out, Alan, because it's about you. I have been reading Homecoming, the 2023 novel by Australian author Kate Morton, which includes the following paragraph. Quote, sometimes Jess pretended that the man who gave the finance news on TV was her father. He seemed sensible and informed. His voice was good-humoured, and he had a twinkle in his eye that made her feel he would be kind. Perhaps an accurate description of Alan Kohler. asks Peter. There you go, mate.
Well,
you are everywhere. Maybe they're talking about Chris Kohler.
well,
Although, yes. You were looking very dapper on the news last night in that dark blue suit. I was going to ask you, how many suits do you have making you look so calm and good-humoured?
I counted them last night, actually. I don't know why I did, but I've got 10 suits.
10 suits. And do you control the colour patterns as to, yellow tie, white shirt, dark blue suit, as you went with last night? Or does some production guru do it? Or do you say to AI, what should I go tonight?
No, it's all entirely on whim. And I always take 2 or 3 ties with me to the ABC, so I've got a choice when I get there.
Very good. So have you got a wardrobe of suits sitting in there, or do you carry them in it? Or yes, you obviously wear it in.
I just wear it in.
Yeah, no, fair.
Well, because I'm a contractor at the ABC, they don't give me any wardrobe allowance. So it's all, so I don't get a bloody wardrobe allowance.
Yeah, at least you can tax deduct those 10 suits, I hope.
Yeah.
I hope so.
Okay, Jane says, my question, if the trade and fiscal policies of President Trump foreshadow a recession or crash, what should we be investing in now, in 2 years' time and in 5 years' time? What are good defensive stocks? Should we, dare I say, purchase the investment property, or should we have a larger than normal investment in cash? What do you reckon, Steve?
Oh, look, I just think it's the top of the market for residential property and stocks right now. So I wouldn't be doing a major pivot of your asset allocation away from cash into property right now. But look, this is the whole thing with Trump. It's very hard to predict. So I would stay relatively defensive, but a defensive position in the past few years has underperformed.
Well, that's right. And defensive assets, the most defensive asset is cash, obviously. And apart from that, there's gold, which has gone up a lot, 60% in a couple of years. And all the Wall Street banks are now predicting that gold will go to $4,000 US per ounce, currently 3,300 or something. Look, I had a big, long piece in last week's weekend briefing trying to looking at gold and what's it worth.
It was a great piece, I got to say.
And so, for subscribers of Intelligent Investor, you can have a look at that and get some idea of how to think about gold as an investment, but it does seem to be heading higher. Apart from that, the way to, I think the other thing to think about or to approach it is just to stick to, fundamental investment ideas and principles, which is to buy good companies with good cash flows that have got a moat that have their revenues protected to some extent. I just think it's true that the share market is at record highs, so you need to be careful. But I think that on the whole, good companies will continue to perform well.
I agree. Andrew says, I listen to the podcast every week. Australian household debt to GDP is 109%. This is higher than the 97% of the US prior to the GFC. So Andrew asks, does this make a GFC-like event more likely in Australia? What are the options to softly deleverage this debt? And does this make it more difficult for Australia to weather economic shocks, such as Trump causing a global recession? Well, I think that the household debt figure often ignores the $4 trillion in super, which offsets the household debt. So the average household in Australia has a debt of $265,000. The average mortgage is $670,000. But I don't think overall Australia's indebtedness, government, corporates, households, is a problem that is worse than, comparable countries. Do you think we have a debt problem, Alan?
Oh, we do, yeah, sure. And it's higher than 109%. It's 180%. And that's really why part of the reason Australia's GDP is stagnating. It's part of the reason that the economy is not doing well, and it's also part of the reason that the interest rate increases and moves in interest rates have such an outsized effect in Australia because people have got so much debt. I spoke before about how a zero real cash rate doesn't really have much impact on inflation. That's part of the reason for that is because everyone's got so much debt. It doesn't really help to have low interest rates. It sort of magnifies the impact of whatever interest rates there are.
And how much worse it would be from a balance sheet point of view if we hadn't had super returns averaging around the 10%. So a lot of people will say, oh, these mortgage payments are killing me, but then they have a look at their super balance and they see it's gone up 10% in earnings for the year plus contributions. So, but obviously it's all locked up until you're 60 or 65.
That's right. I was going to say
pay the mortgage.
You can't get access to that money till you don't need it.
Yeah,
yeah,
that is true.
It's true. My turn. Yes. Lee says, my queries, he talked about my 2005 book, Making Money. My queries are, given the GFC, COVID-19, the everyday investors that have piled into the share markets and AI, all of which have occurred since the publication of your book, are the principles discussed in the book, specifically the asset class allocations for a growth objective, also the percentage of exposure in the US, still good principles and objectives to follow? Also, are the valuation methods still good buy indicators? I'm looking to move 20% of my investments from the lowering bank fixed interest to growth. Any ideas for growth in this current climate? Would you be publishing a revision of your book in the future? No plans to publish another revision of the book, but anyway, the principles in the book are timeless ones. So, yeah, they still apply, that's for sure.
How many books have you done, Alan, over the years?
Oh, I don't know. 4 or so. Not that many.
I've had 2 book contracts, but failed to deliver a manuscript. But I was lucky. Rupert let me keep $10,000 of the $20,000 advance when I failed to deliver a memoir for HarperCollins.
I hope he didn't
and I spent that $10,000 flying to New York to annoy him at the next AGM.
Oh, excellent. But I'm glad I hope you didn't spend the whole 20,000 of it. No. You had 10,000 still in the bank that you could give him back.
Well, I know they contracted to give me 20 and gave me 10 up front.
Oh, I see.
Then they heard, the bosses heard they'd signed me, so they never asked for anything because they were furious that someone at HarperCollins had signed me. and then a few years later they said, you haven't delivered, give us our money back. And I said, I've been working on this for years. Let me keep the 10. And they said, fine, go away. We're never publishing you, pal.
All right. Very good.
Alistair says, I enjoy your articles, Alan. Build 2 stories instead of single story. Make them semi-detached as well. That will double the density. They do it all over the world. Some even go to 3 stories with a granny flat. Gosh. So we've got a number of questions today on the housing challenge, including your golf courses controversy. So I guess on Alistair's specific
we should possibly
point,
explain what the golf courses controversy is.
Well, Alan went to a housing forum, told them all they weren't getting serious because under the forecasts we need 34 square kilometres a year of new land available for
in the suburbs. That is,
that's suburbs.
That's the 70% of total land that the governments want to have apply to existing suburbs. That's what the 34 square kilometres is. And I said, well, if you're serious, you're going to have to do some radical things because there's a crisis on. Is there really a crisis? If there is, and what about the golf courses? And what about taking planning decisions off councils?
Yes, now I can actually tell you a real golf course story, Alan, because when I was on Manningham Council, the Eastern Golf Club decided to sell themselves to Mirvac for $100 million, 47 hectares in Doncaster, and Mirvac went ahead and built $890 million worth of homes, 913 homes that they sold over the next 10 years. And it was the cover photo in 6 of their half-yearly reports. So I'm guessing Mirvac made an absolute poultice out of this and that the golf course land was actually worth a lot more than $100 million. But to demonstrate this point, this was a 47-hectare golf course in Doncaster. To get to 34 square kilometres a year, you need to have 72 equivalents, 72 Eastern golf clubs a year to meet this solution. So I think, Alan, that your solution is not going to go far enough, and we should be building on the cemeteries. We should be building on the airports, Essendon Airport, Moorabbin Airport, building on the parks, But I agree that we do have too many golf courses.
Who got the $100 million?
The members. And they made the mistake of going further out, building on a floodplain. They then got flooded, and then the clubhouse burnt down a couple of years ago. So they should have just given the members the cash. There's a great story I heard. I went to one of our bowls clubs in Manningham, and someone said, "See that guy over there? He's our favourite member." And I said, "Why?" He goes, "Well, he was a member of a bowls club further away, and they decided to close the bowls club, and they sold it off to a developer. And rather than building a new bowls club, they gave the money to the members. So the members had to nominate a new bowls club they wished to be a member of, and they got to take 70 grand each with them. So that member walked through the door and said, I want to become a member of Doncaster Bowls Club, and I bring you $70,000 because that's my share of the sale proceeds. So Eastern should have just sold it off, and then all the members of Eastern should have walked into other golf clubs all over Victoria and taken their share, because the members can't pocket the cash, but the Constitution will always say that the proceeds of any winding up or sale must be gifted to a like-minded organisation or institution.
Huh, there you go.
So that's the solution.
There you go. Sam says, I don't know about getting rid of all the parks and golf courses, because what are we going to do with our spare time when AI takes our jobs? Or words to that effect. And that's fair enough. I mean, I didn't actually say we should take over the golf courses. I said, what about doing a study of how many people actually play golf, and how often, and how many golf courses do we actually need? Have we got too many or not? And then someone wrote in saying, well, actually the National Golf Association of Australia does studies like that all the time, and sent me a link to it. So I don't know. I mean, I would have thought the National Golfers Association is probably biased, and so I probably wouldn't believe a word they say. But that's just me.
Yeah, no, look, I agree with you that there is too much of an allocation of very lovely land, huge land allocations to a recreation played by 90% by men. It is quite elite and exclusive as well. It's quite expensive. So, yeah, you can run an argument that a good chunk of our golf courses should be seized and developed for housing. I mean, I think you should also mention race courses, Alan. I mean, don't forget that the Rose Hill Race Club was going to be sold for $5 billion to the New South Wales state government to deliver 25,000 new homes. But the Australian Turf Club members, led by Gay Waterhouse, voted it down and say, where are we going to train our horses? We love having this hugely valuable land in the middle of Sydney's west, so go away. And the thing got voted down by the members.
And the race courses are hardly ever used. Well,
it's
not that often. Somebody did write to me saying you should include race courses in that.
Oh, absolutely. They've got some of the most privileged land. So, but it's the privilege of the incumbents, Alan. In a democracy, it's very, very hard to remove the incumbents from anything. That's where you need government to come over the top.
I should say that the 34 square kilometres thing comes from Marcus Spiller, who is the Deputy Chair of the Australian Housing Supply and Affordability Council, which was the government body set up after the National Housing Accord to keep an eye on the housing system in Australia, and they report annually on what's going on and what the demand and supply situation is. And their kind of latest thing, which was released last week, said that demand is going to exceed supply over the next couple of years by 80,000. So they study these things, and they reckon that the National Housing Accord target of 1.2 million houses over 5 years will not be met. And it was Marcus Spiller, the Deputy Chair of that thing, who's also part of SGS Economics and Planning, says it's going to require 34 square kilometres. And he said to me later that probably the governments are going to have to start looking at compulsory acquisition of land, of houses, so that to help developers put together large enough plots for medium density housing. Because one of the problems developers has is putting together decent areas of land to build medium density housing on because they're all owned by individuals who don't want to sell. And so
Well, I agree with that. You know, the other thing they should do, they should remove the rates exemption and maybe land tax, but start with rates on churches and not-for-profits because they are massive land bankers. And they should also make state governments pay council rates and councils pay land tax. So you have money going both ways. But that sends a price signal to the owner of the land to highest and best use, because the laziest people who are sitting on the most amount of land not using properly are those that are exempt from the taxes of irrationally sitting on land and not using it properly. So start with the Catholic Church with their $100 billion worth of property assets across Australia. They don't need a rates exemption. And if you started charging them rates on all their property, they'd start selling a few things and that would help deliver a bit of housing.
Yes, indeed. Cop that. Okay.
Now, Mike says lots of people, including you guys, we're all guys, unfortunately, and the AI tech bros mention universal basic income as a solution to unemployment caused by AI. I can't see how this would work. UBI would be paid by governments, but the mega profits would be made by the tech giants and other large companies who get to lay off their workforces. Given we can't get tech companies to pay tax now, how will we ever afford a universal basic income? Interesting question, Alan. How would you implement a UBI scheme with mass unemployment caused by AI?
Well, I do think they're going to have to do something, probably. If there is, if it does turn out there will be mass unemployment, the current job seeker system won't really work. So there will need to be, a less conditional payment to people, and it needs to be more. It'll need to be more in order to keep people kind of going.
So sort of a broadened dole age pension payment for everyone.
I guess so, yeah.
And then it should be taxed. So yeah, everyone gets $1,000 a week. Everyone gets $52,000, but then you've got to pay. It is income. You've got to pay tax on that, and there should be some obligations. Like otherwise, no one would work. If you can sit back on the ground a week from the government, why would you work? So how do you get the incentives in there? Do you have a sort of a work for the dole type model where you've got to do a bit of lollipop shifts or data entry for the government or clean up the rivers sort of work schemes? I mean, you can't just give it away because no one will work.
Yeah, look, I'm struggle with UBI, to be honest. I can't see how it would work. I mean, particularly the fact that it wouldn't be means tested, which means that all sorts of rich people would get it as well, including the AI bros. I'm not sure. I just don't really. I can't get my head around it, to be honest.
And the existing mechanisms, i.e. unemployment benefits, will just kick in. And, 'cause anyone who's thrown on the scrap heap by AI, there are unemployment benefits to help them get through. So it needs to be more generous probably. But look, I guess at the moment we don't have signs of massive job losses, but, even Microsoft is sacking, 9,000 workers globally. Telstra announced 500 yesterday, although they're stressing it's not AI, but you can certainly see it could get a lot worse. Now, Perplex says, I'm almost 60 and have more than 3 million in super. I have a high-paying professional job. But if this new tax comes in, the only way I can access this money to put it into a lower tax environment is to retire. So Perplexed is saying that you can't access your super unless you say you're retiring at the age of 60. So he's saying that he wants to keep working, but to get out of this super tax, he's going to have to say when he's 60, I'm retired, and then roll his super into some other vehicle just to avoid the 30%. Do you think in this era of, the gig economy and side hustles and people working a little bit, it is a bit anachronistic, isn't it, that you can only access your super at the age of 60 if you swear that you've fully retired and you're going to stop working. But then when you get to 65, you can just have it, no questions asked. I mean, that's a silly rule, surely.
Yes, I agree. And I think this is also a silly rule to make it all tax-free after 60. But look, I'd say to Perplexed, just pay the tax. For goodness sake, it's not going to be much. 30% tax on earnings on the amounts above 3 million. It's not the whole amount. It's not the earnings on the whole amount. It's the earnings on the amounts above 3 million. So for you, it'll be, unless you've got, 30 million in tax so that so it's a whole lot more than $3 million. You're not going to be paying much at all. Don't worry about it. I mean, honestly, I think everyone's getting carried away here.
I agree.
It's not
having
that
a
big of a
huge
deal.
having a huge tax bill is a great problem to have because it means you've made a pile of cash.
Well, that's right, and so it just means the tax on income above amounts on the amounts above $3 million goes from 15 to 30%. So it's still a tax break. It's just not as much of a tax break as it used to be. And come on, just pay it.
I'll let you pick the last question, Alan.
Okay, last question from Peter. Be keen to get your thoughts on Pact Group's voluntary delisting intent on July the 16th. Seems to be some arm twisting by major shareholders wanting it off market to me.
Look, Peter, I did go to the Pact Group EGM special meeting to vote against the proposal to voluntarily delist. So what you had happen here was a billionaire, member of the Pratt family, Raphael Geminder. He floated this thing back in 2013 at $3.80 per share, and he tried to buy it back for 84 cents a share. And there were a couple of holdouts, a couple of fellas called David Harris and Mark Gandia, who refused to sell to him. So he got stuck with 88%, and you've got to get to 90% to be able to compulsorily acquire. So I thought it was pretty poor form that he said, well, I can't get to 90% and own 100%, so I'm going to delist it, which means for the remaining few thousand shareholders, if they still own the stock after it stops trading literally next Monday, July 14, you've got to then arrange your own sale. And so, I thought it was pretty poor form when you've got 1,800 shareholders that you delist off the ASX. But you can do it because he owns 88% of the stock. So he's able just to vote his shares to do that. I mean, the guy's worth $1.7 billion, if you believe the latest AFR Rich List. I just think he should have offered a more generous minority offer. And maybe those critics would have sold into that. But look, it's untidy, and you do see it happening a bit more of companies just delisting, and then your own shares in an unlisted public company, and you've got to arrange your own share sales. It's not as good as a liquid, open public market like the ASX.
Definitely not. But did he succeed? Did it get delisted?
Yeah, well, next Monday, that's it. Trading stops. So if you want your liquidity, I'll probably sell my 10 shares on Monday because... But then again, he still has to have an AGM, so I can annoy him at the AGM privately. But it's not good to do a hostile delisting when your minority shareholders would rather have the liquidity, when you could have just offered them a more generous takeover and it would have been a lot cleaner, particularly when you're worth $1.7 billion to start with.
Well, he obviously didn't feel generous. He thought, bugger you, I'll fix you guys.
Well, these two minorities they sold their business to him and took shares, and they're in court fighting over a $30 million earn-out payment. So it's actually a bunch of big corporate rich types fighting amongst themselves over takeover deals gone bad. So there's a bigger story at play, but there's a whole bunch of small shareholders who've got left holding illiquid stock, which is not a great structure to be in.
No, they should have sold. You should have sold.
I should have sold. But, again, if you've paid $3.80 a share, I mean, they raised $650 million in this float from the public. And then they're buying it back at, 1/5. It's not a good message overall. And minority shareholders should be treated with respect, particularly when they've lost 80% of their shirt, in this case, with a company which has performed very poorly.
Good for you, Stephen.
I think we're done, boss.
Thank you for listening to today's episode of Money Café, everybody. I'll be back next week with James Thompson. So send in your question to themoneycafe@eurekareport.com.au and we'll try very hard to get to it. So until then, I'm Alan Kohler, founder of Eureka Report and finance presenter and columnist for the ABC.
And I'm Stephen Mayne, and we'll see you in a fortnight.